PVR next, Ruby.
Absolutely. So let's get the performance numbers on the screen in a bit. We'll just connect with the management as well. It's been a quiet end to the year, if I can say, for PVR. Most of the operational metrics are slightly flat. Revenues down 1%, EBITDA is up 2%. But the margin over Q4 of last year, the margin has improved. It's come to about 22.6. Some will argue that it's still shy of market estimates, but at least, there is some improvement over last year. So what lies ahead as the company looks at, navigating itself and morphing into a sort of a new strategy, the strategy that Mr. Bijli always speaks of, which is films, food and fun. Thank you so much both for joining in, Ajay Bijli, Managing Director, as well as Gaurav Sharma, CFO of the company. Good afternoon to you, gentlemen. And I'm glad we're being able to speak at a time, right? There is some peace and calm overnight, and our men in Brave have done their job. So I'm glad we can go back to talking films, food and fun. Ajay, let me throw it open with you. Very quiet end, like I'm saying, to the year. But investors would want to know how quickly you're moving on that strategy. I mean, whether occupancies have improved in the fourth quarter. Let's talk about the films business first. What is your outlook? How do you describe Q4 in terms of occupancies, etc.? And then what's the outlook?
Well, last year was actually a very bad year, because Hollywood was impacted because of the strike, and our circuit really depends a lot on Hollywood as well. So we had a dip in the number of films and as well as the box office collections from Hollywood last year. Even Hindi film industry did not have any big hits. We had two big hits only, Stree and Chava, but none of the big stars had any big film at all. So all that has changed this year. So why we look a bit more optimistic about this year is because all the big stars are back, and also Hollywood is coming back in full force. And of course, regional films have always played a very big role. There's a Kantara 2, the franchises always do well, that's coming. There's a big Kamala Hassan movie, there's a big Rajnikant movie. So keeping all that in mind, the film business definitely is looking much better than the last year, because all regions are firing. At least on paper, all regions are firing. There's not a single segment which doesn't have movies to play this year.
I completely would agree and echo that sentiment, and looking forward to more of it. I've seen a couple of movies again, whether it was a Sky Force or Raid 2, which Nigel and I watched together. So yeah, good movies are always fantastic. So just tell us about occupancies. Gaurav, maybe you can take this question. Occupancies in Q4, and whether you expect more improvement, Q1 so far, what you're seeing, and then, going into the rest of this year.
I think we believe that, as Mr. Bijli said, the lineup of films this year is pretty strong, and we will see an uptick in occupancy throughout the year in all the 4 quarters. That said, the numbers are going to be definitely higher than last year, but maybe volatility will continue to be a factor during the year in terms of supply of content. Occupancies full year for last year were roughly around 23%. Financial year 25-26, we are looking forward to a better number.
Where were you at the end of Q4, Gaurav?
Q4 occupancies were about 20.5%. Okay. It was a subdued quarter. Other than Chava and Skyforce, the two Hindi films, there were no other big Hindi films. Hollywood was also subdued, and therefore the occupancies were slightly lower than expected.
Okay, all right. Hi, good afternoon, Ajay, as well as Gaurav, and good to see you on the show. Disclosure out there, Raid 2, backing up, family. So I was happy to see 125 crores in terms of collections. Good going out there. But Gaurav, you said that you're expecting occupancy to be better, right, in the coming year?
Yes.
From around the 23% on an average, what should it look like? And the other metric we track is the ticket prices. How do you see that movement out there? In the past quarter, was there any discounting?
Well, I think if you look at our ticket realization last year, we have been at the same number of 259, which was in financial year 24, despite of, a drop in admissions and lack of big blockbuster Hindi films and lack of tentpoles from Hollywood. So our strategy has been to, capitalize on blockbuster films and also offer more value and promotions for mid to small scale films. We did a lot of Cinema Lovers Day, National Cinema Day last year. We did many re-releases, and despite of that, the ATP has been quite flat. I think current year, financial year 25-26, we expect the average ticket pricing to grow, and the growth will be largely in line with the inflation. And
Okay.
it will also be dependent on the mix of films that get released.
Okay, and occupancy? Expectations on occupancy to better from 23%?
Yes, the expectation on occupancies is that it's going to be better. I would not like to comment on specific numbers because it's really a function of how films perform at the box office. And, there is always some, some sort of, unexpected factors, which is very difficult to predict. But, looking at the lineup of films, Hindi film industry as well as English films, very strong lineup. And we are very hopeful that it's going to be better than last year.
Just one more question. What about screen addition? What was it in the past year and what are you looking at in this year?
Well, we have been very careful. Mr. Bijli, would you like to comment on that?
Oh,
Yes, sir, please.
Just this only, that we opened about 77 odd screens. And in this first month itself, we've opened another 20 screens. So again, the screen opening will continue to remain at about 100 odd screens every year. And so, there's nothing that will stop the growth. Of course, we're closing down screens as well, which are in old malls or shopping centers, which have already seen their, end of life, like in any other retail business. But overall, the screen count will be about 100 screens every year.
Net addition. Mr. Bijli, good morning. Gaurav, good morning as well. Just the re-releases are also another thing, right? I mean, I guess I can tell you there was so much excitement about Andaz Apna Apna in office here. It's a legendary. Interstellar was another one. I saw Interstellar once, I think, for the 5th or 6th time. But there's a whole new sort of segment that you've opened up. But Mr. Bijli, broadly, and you guys talked about the lineup, and I have it in front of me here as well. Would you say, and as you've always said, you don't know. I mean, something works, something clicks, it clicks. Yeah. But looking at the pipeline, does it look, how should I put it, much better, much more promising than what you had last year?
Definitely, because, Hollywood plays a very important role in our circuit, because the way the cinemas are geographically located, in the demographics that we are, Hollywood has a very important role. And Mission Impossible, Avatar, Jurassic Park, plus this big Apple movie, which is coming on IMAX, F1 of Brad Pitt. Then so many other, Conjuring is coming again. We've got Jaws getting rebooted and coming again. Lots of movies. There's a Keanu Reeves movie, Ballerina, I think it's called. That's coming. So I think, and then of course, Amir hasn't been on the big screen for a very long time. And he's coming with Sitare Zameen Pe. And also, Hrithik didn't come last year. Ranbir's film is coming later with Sanjay Leela Bhansali. And then Houseful 5 is a very strong franchise. And I like these movies because they resonate with the entire country. And regional, even last year, regional played a very important role. Pushpa 2, which is a franchise, did very well. Now we've got Kantara 2 coming, Rajnikant's movie, Kamala Hassan's movie. Then there's a movie called Toxic, which is coming, of Yash. Towards the end of the year. So I think first time, at least on paper, I'm seeing all three or all regions having a good supply of movies.
And in this sense, I mean, Bollywood has not, if I can put it that way, it's not pulled its weight for the last couple of years, but it looks like Hollywood, Bollywood and regional, as you're saying, right? All three, it's a pretty promising lineup in that sense. Gaurav, I don't know if my colleagues touched upon margins. Would you want to just guide investors to where you see that you see margins panning out in the year FY26?
So Prashant, typically we don't provide any guidance on margins because it's very difficult in our business to predict how the films will perform. I think we have a high operating leverage business, and any incremental admissions and occupancies largely will flow into bottom line. This year, financial year 24-25, our EBITDA margins adjusted for Ind AS 116 accounting was roughly around 8%. And with uptick in footfalls and admissions, the margins are going to be far better than what we did last year.
Okay, Ajay, if I could come back to that larger question. I know this is a longer conversation, but for now, before we let you go, if you could leave us with maybe a microcosm of what lies ahead. The film's food and fun strategy. And on the fun side, you're doing so much, right? You're trying to sweat your assets in a different style. I know that now there are sort of, perhaps some of the theatres are being used as comedy shows or other, exhibitions, other corporate events. And I read somewhere that I think you're trying to get a liquor license as well in some states to add to the fun quotient, so to speak. And then there's the food part of it. There was a JV with Devyani. So just in a nutshell, if you could tell us, we've discussed films at great length, but for food and for fun, in terms of a revenue potential, what's the kind of mix that you will target by the end of the current fiscal? What can investors look out for over here?
Well, we've only opened one food court so far, but we've got about 10 in the pipeline just now. And I think that was really the strategy of, that's what COVID taught us as well, that don't have all your revenues only coming in a post-ticketed, environment. And I was very keen to do something pre-ticketed and also take advantage of the fact that PVR Cinemas itself and Inox Cinemas, we attract, a lot of footfall. So where all the boxes are getting ticked, the mall is good, the development is good, the tenant mix is good. We are going to get high footfalls. Why don't we, adjacent to our cinemas, also open food courts? But both Devyani and PVR, we are very cautious in our initial phase of expansion, just making sure the modeling is right. And then now, in fact, we just had a meeting with them last week. And now we have about 10 odd properties which are going to be coming up very soon, because we just don't want to do it for the heck of it. We want to make sure it's a very quality offering, because a lot of developers themselves also open food courts. And so what do we bring to the table with this brand called Treat Junction that we have got? We needed to make sure that the strategic, positioning in the marketplace is correct. What percentage of our revenue is going to be that is going to be still small.
Yes.
And, we are close to about 6,000 crores of revenue. So it's going to take time before this food business, our own Zia Maze, which is the 47 BC business, whatever tie-ups we have with aggregators like Zomato and others, that percentage I can't give you just now. But
Got it.
It's a move in the right direction.
Got it. Got it, Ajay. Since it's relatively small, we'll keep that away. But before we let you go, we need to ask you, what's the current debt on the books? You were talking about an asset monetization program. Where do we see the debt number come down to by the end of this fiscal, FY26?
Well, let me answer that. We've significantly strengthened our balance sheet over the course of last 2 years since merger. Our net debt level stand at about 950 crores today, which has come down by about 480 crores over the course of last 2 years. Despite of the business volatility we have seen, we have curtailed costs. We have been pretty capital efficient. I think going forward, as I said, as the operating cash flows in the business improve, debt levels are bound to come down. Our objective is to reduce overall leverage in the balance sheet as much as possible. As far as asset monetization is concerned, I think, we've been very careful in terms of making sure that we get the right value for the assets we own. At this stage, we feel that, we are able to organically control the debt levels and not sell any own real estate properties. But we will continue to assess our strategy going forward and see if we can further improvise it.
All right, gentlemen, appreciate you joining in. Thanks a lot for joining in. Wishing you all the best for the remainder of this fiscal. And Ajay, from what you said, there are two of them I'll be looking out for. One is Sitare Zameen Pe and the other one is Houseful franchise. We'll look forward to that. Due disclosures on board. Thanks a lot for joining in.
Thanks a lot, Nash.